It's the turn of the European Central Bank this week to decide on interest rates. Thursday, the 7th of September, 12:45 UK time, it comes out with the announcement. And 45 minutes later, there is the press conference at which there's quite often more flesh put on the bone. Let's talk now about the flesh and the bones with Chris Beauchamp, who joins us with some more analysis. And the general thrust of opinion seems to be that the ECB is not going to move on interest rates this time around, and probably won't give us any further real decent clue on what it's going to be doing with QE. But what do you think could come out of the press conference?
Well, I think you might see, the press conference is always a more interesting one, really, given the way that the statement is so carefully worded. So you might get the odd slip or hints as to future direction of policy when the press conference comes around. I think there'll be an acknowledgement maybe of the fact that you've got a strong euro, a continually rising euro, particularly against the dollar. It's been a very strong run this year, and how that's beginning to bear down on growth forecasts and on inflation. Of course, we've got a strong currency that tends to push down inflation. It tends to really worry exporters as well. So that can hit growth. You might get a sort of realization that the time has come for the ECB to do something about that. But at the same time, there's the flip side, which is that things look very good in the Eurozone. The economy is improving, the data is getting better, and that there isn't much more rationale for further QE. Really, I think the time for that has come to an end, and now we are fundamentally looking at an ECB that wants to tighten policy. It's just really a question of when and how they're planning to do that.
I think one of the interesting things for me is the fact we've got €2.5 trillion worth of quantitative easing that the ECB has pumped through the system. Doing some back of the envelope calculations today, and that's around about something close to €8,000 per person in the Eurozone that they've handed out into the market. Yes, it's been done through the bond market, so it doesn't actually affect anybody in particular directly, but that's a lot of money. And when you're getting growth at just 0.6% quarter on quarter, that still to me seems very anemic, bearing in mind the amount of money they pumped in.
I think it's a major issue for not just the European Central Bank, but others around the world, that you've seen this massive monetary stimulus by the central banks, and yet the growth they're getting is, as you say, weak at best, really. It's not the kind of soaring growth that you need to really worry about. So this is another problem for the ECB. How do you start unwinding that without hitting what is already weak growth? And remember, as we've learned from the Fed, just because you stop buying bonds every month in QE, you still keep reinvesting the proceeds. So the ghost of QE lives on a lot longer than you would think, just given the fact that if you announced this week that they were stopping entirely, you'd still have QE for a long time in the Eurozone, because unwinding it takes a long time as well.
Let's take a look at how to trade this, because, as I said, no, we're not expecting any sort of major monumental announcements tomorrow. Let's take a look at euro-dollar first of all, if we can. Now, you're talking there about the long-term appreciation for the euro against the US dollar. Just a quick look at this on a daily chart, and you can see this channel that we've been in since the 22nd of February this year. And it's been a pretty good guide to go on, that has. It
has been. It's been a very strong run. We saw 120. A couple of weeks ago, really very, very powerful move from the euro. And I think this is the point, that even if you hint at tapering asset purchases, reducing QE, then you could see the euro starting to move higher once again. Now, we've touched the top end of that channel above 120, then we dropped back the next couple of days. But we've started to see once again a revival in euro dollar. And I think it's highly likely that we see further gains for this one over the longer term, and it makes sense to go with the trend. Now, before we sort of go any further, we should note that, of course, ECB day could be quite volatile, so you should be prepared for big moves on the day, depending what turns out in the press conference. But I think the overall path here should be higher, and indeed, if we go back to the top end of that trend line again, then you'd see maybe even 122 within fairly short order. I think it's unwise to get too bearish on this one unless we see a breakout from this channel to the downside, so that would say below 118, and really even then you've got a lot of support just below that at 117. So it's a hard work for the bears really on the euro if they are to get this one moving lower. For the time being, as you can see on this 4-hourly chart there, the dips continue to be bought. The stochastic does quite nicely over the last few months as a guide for that, and you've seen a good recovery above that's the 50 and the 100 period moving averages on this chart, and it's continuing to move higher from here. So I think even with that acknowledgement of increased volatility, there still looks to be some more upside here.
Yeah. What about sterling? We bring the pound into the mix here and look at euro sterling.
been a similar direction, if you like, in terms of upside movements. Very strong euro, the pound buffeted by slightly weaker UK economic data, worries over Brexit, weakens, and we all know how the script is playing out here. Now, it has been...
This is the 4-hourly chart.
Again, it's a 4-hourly chart. You see steady move higher from the middle of July, quite a big dip into the midst of July, 87.50. Now we find ourselves at 91.50. It has been a slightly choppier move the last few days. We tried to rally at the beginning of the month. We dropped back yesterday. Now, I think it might be a point where you could see almost a bounce or bust moment for this one, depending what the ECB says. But even then, I think you've got more downside before it really breaks this downtrend, maybe down towards the 90.50 mark there, which we last really saw at the beginning of the month. That would be a much more bearish development. So you might have the chance for one more rally higher from this point, back towards 93, and then potentially even higher, depending on how the press conference goes.
What about the equity markets? Which indices should we be following out of this?
Well, the one people tend to go for with Eurozone stocks is the DAX. It's not to everyone's taste, of course. You can play the CAC or the E-Stoxx 50 as well, but the DAX is probably the one that people go to for the dramatic reaction. And you can see, just as the Euro's been getting stronger over the last few months, the DAX and indeed the other European markets have been notably underperforming the S&P, which has made fresh record highs. The DAX hit a record high in June and it continued to drop back. Now, the last few days we've seen an attempt to try and push back above 12,200. That's not really succeeded. It's trying again today. So watch for this the next couple of days. The DAX, of course, is particularly volatile at the best of times and even more so on ECB day. But I think as long as you sort of hold below that 12,200 kind of zone, you probably should expect another turn lower in due course. Usually when the euro goes up, the indices tend to go down. So watch for that. And then you've got a lot of support really coming through just around that 11,900 level, which we saw right at the end of August.